inflation, 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 higher prices, higher gas prices, higher wages. These are all things that have investors on edge a little bit. So Alfonso here has a very contrarian view on this, and he is not concerned about inflation. In fact,
no,
he is very much about disinflation, which is different from deflation, which we'll talk about in a little bit. But Alfonso, give me your views here of inflation and why the concerns about inflation are misguided.
Yeah, thanks for having me on the show, by the way.
Thanks for coming on.
I really appreciate this. So the first thing I'm going to say here is that, yes, we are going to see inflation for the next few quarters. We're probably going to see core PCE in America around 3% for the next 2 to 3 quarters, but that's it. We go back to structural trends. We go back to the disinflationary trend that basically we have seen for the last 40 years, since 1980s. We're going back there, and actually, I guess, pretty soon as well, in the next 2 to 3 quarters. And then, we're back to our secular forces. So I believe this is all temporary. And the hype around there in reflationary trades and market commentaries about inflation is way overdone. So I also think the peak in bond yields is what we have seen in this cycle at 1.75% in 10-year treasuries. I think it was May. And that's the best you're going to see if you're looking for higher yields. Now, on 10-year treasuries, we're already going down to 1.3%, but I think we're headed lower as well as we go into next year.
Headed even lower than 1.3. Okay.
Yeah, I guess so.